Good morning. It is May, 17th, 2023. And we're going to be talking about retail today. You probably saw the Longbow arrows where we talked about Target and TJX. We're going to cover those today with the Longbow platform. But first, I'm going to talk a little bit about their earnings seasons. First, Target, they beat on earnings, but it wasn't due to the top line. Basically, the company's sales were roughly flat year over year, and consumers were buying necessities. So it guided to a low single-digit decrease in sales for this coming quarter as well, but held onto the full year guidance. Management said that shoppers spent a lot less in the quarter and as it went on. So beauty was the strongest, followed by food and beverage. That's your grocery section, as well as health and pet. The laggards were apparel and home. And digital sales were pressured. And it really makes a lot of sense because if you're getting your groceries, you're going to pull up to the store and you'll do curbside or you'll go in the store to get them. One of the key things that they also mentioned is that they're battling $500 million of inventory shrink this year, which is really caused by theft and organized retail crime. And you've probably heard a lot about it. If you live near shopping centers or big cities, I'm sure it's affected you and the stores near you. The National Retail Federation pegged retail industry shrink at $94.5 billion in 2021. And Target CEO is talking about how it's getting worse. The stock is up because the results were a little bit better than feared, and investors want the company to focus on margins is what they're doing. So that's first. And second, we're going to talk about TJX. Versus Target, TJX boosted guidance for the year, even with slightly lower top-line forecasts. They've been taking share with their mix. Just as you saw less retail over at Target, you can see that going up at TJX. So they have better mix, favorable buys, executing the off-price business model. So those consumers are trading down. You're seeing it at two different shops, and prices are staying high at other retailers, and that hurts demands. And we've written how that game only lasts for so long. People trade down. That's what we're seeing here. And you can't keep getting high prices. You have to. It's going to affect demand and your top lines. But just as a reminder, TJX is the parent of TJ Maxx, Home Goods, and Marshalls. Interestingly, their same-store sales were 3% above the 2.7% growth consensus forecast on FactSet. The management also talked about high surplus inventory with high demand for apparel and accessories. So note that, not so good at Target, good here. And that could keep delivering for the company if we're going into a recession. Management also talked about lower freight costs and higher markups offsetting the same high wages and shrink expenses that we're seeing at Target. So let's go over to Longbow dashboard and see how these securities are actually performing today. So here I'm showing you both Target and TJX. And let's take a look at some of the signals here. So Target, short term is neutral, and medium term it's been bearish. It's traded with a 74% implied volatility premium, which means that people were paying up protection. They were worried. So even though I would say the quarter wasn't bang up, you can see why it's up after printing because people probably were a lot more worried about this one. And it's in the middle of the range still. So even though it's up a little bit here, you're looking at minus 1.4 odds to the downside to 1. So upside of 2%, downside of almost 3%. So this isn't the time if you're believing in cost cuts to be, loading up on Target. You'd be waiting for that to the low end of the range. That is at 155.05 today. That really compares to TJX. That's bullish short term, bullish medium term. I'll say that's something that we own. That also was a high implied volatility premium, 80%. People really worried about the consumer, you can see here. But we've got that overbought today. So that price is up. People are probably buying into it. They're excited about the story. Well, that's a little bit too late. Don't be doing that. We're trying to tell you, don't do that right now. You want to be waiting till it's a low end of the range, which looks like 77.5. Right now, it's 4-to-1 negative odds. So the asymmetry is very much to the downside relative to the trading range, even though you got fundamental good news, which will alter the trading range. Again, not the day to be plugging into this one. You can see this one's on a roll. Everybody knows it's an off-price discounter. Still kind of shocking to me. Well, we could buy it and make money on this thing. People probably wait till they see consumers start trading down. That's what we're seeing here. And you can see now it's above the top end of the range. So again, not the time to be plugging into this, but still we believe will be a beneficiary during a recessionary type environment. So we don't know if it's a hard landing. We don't know if it's a soft landing, but we do know that consumers pinched. They're worried. You've seen that with the consumer sentiment indicators. And so they're trading down. They're waiting to buy on big purchases. They're buying on necessities. That's it for today. If you have any questions on these two securities, let us know.